Today we'll be going through the operations of petty cash funds. It's simple. A petty cash fund is basically an amount of cash kept on hand to pay for minor expenditures. So an example would include postage for small mailings. The three main operational activities involved in petty cash funds are establishing the fund, making payments from the fund, and replenishing the fund. We will also discuss further on about what happens when there's a cash over and short. Now let's start with establishing the fund. We'll break this down. So first, a cheque must be written for an amount of the fund. Then the cheque must be cashed. Lastly, the company must place the cash under the care of a custodian. It is also important not only to understand the theory of this, but also the practical. Therefore, creating a journal entry is done to record the establishment of this fund. Let's make a hypothetical example. Say Emily's Juice Bar. Suppose on the 1st of April, the company cashes a $200 cheque to establish a petty cash fund and gives the cash to Andrew, the custodian. On this specified date, the following entry must be recorded. The journal entry increases petty cash by $200 and decreases cash by $200. Once established, the cash is now used to pay for qualifying expenditures. Cash can be taken from the fund to make payments, or employees can seek reimbursement from the fund for payments they have personally made. It is important in both cases receipts are collected, as well as no journal entries are required for this step. Finally, replenishing the fund. To replenish the fund, the following steps must be encountered. First, the remaining cash in the fund must be counted. Second, the company must request a cheque to be cashed. This must bring the total cash in the fund back to the original balance. And finally, the fund is replenished. Suppose Andrew examines the fund and prepares the following report for the 30th of April. The report shows a $150 cheque needs to be cashed in order to replenish the fund. This is calculated through the receipts totaling to $150, as well as the journal entry increases the four expense accounts and decreases the cash account for the total amount of the cheques. Cash over and short is a temporary account that can either have a debit or credit balance, depending on the situation. A debit balance increases expenses, whereas a credit balance decreases expenses. In this case, a cheque must be written for $155 to fully replenish the fund. However, there are only $150 worth of receipts. The $5 is charged to the cash over and short account. In this journal entry, the cash over and short account is debited, indicating an increase to expenses. And that is it. Finally, we have done it. Petty cash funds from